Incoming bonus content coming your way. Let's start. Here are some important tips for beginners who are considering the subject to strategy in real estate investing. 1. Education is key. Invest the time to thoroughly educate yourself about the subject to strategy. Read books, attend seminars, listen to podcasts, and engage with online forums to understand the nuances, benefits, and potential risks. 2. Seek professional guidance. Before engaging in any subject to deals, consult with real estate attorneys and financial advisors who specialize in real estate transactions. They can provide legal and financial guidance to help you navigate the process correctly. 3. Understand due-on-sale clauses. Gain a clear understanding of due-on-sale clauses in mortgage agreements. While these clauses may not always be enforced, they carry potential risks that you should be aware of before proceeding. 4. Thorough due diligence. Perform rigorous due diligence on both the property and the seller's financial situation. Conduct a title search, review the mortgage documents, and assess the property's condition to ensure you're making an informed decision. 5. Ethical transparency. Be transparent with the seller about the subject to arrangement, including its benefits and risks. Make sure the seller fully understands what they're agreeing to and obtains legal advice if needed. 6. Build a network. Connect with experienced real estate investors, mentors, and professionals who have successfully executed subject to deals. Networking can provide you with valuable insights, advice, and support. 7. Assess cash flow potential. Carefully analyze the property's potential cash flow. Ensure that the rental income can cover the existing mortgage payments, property expenses, and leave room for profit. 8. Create clear contracts. Work with a real estate attorney to draft clear and comprehensive contracts, including the purchase and sale agreement and the subject to addendum. These documents should outline the terms and responsibilities of both parties. 9. Focus on distressed sellers. Target motivated sellers who may be facing financial difficulties, foreclosure, or other challenges. These sellers may be more open to the subject to strategy as a way to relieve their financial burdens. 10. Build a team. Assemble a team of professionals, including real estate agents, attorneys, contractors, and property managers, who can support you throughout the subject to process. 11. Understand exit strategies. Have a clear plan for how you'll eventually exit the subject to deal. Consider whether you'll hold the property as a rental, sell it, or refinance it under your name in the future. 12. Start small and learn. For your first subject to deal, consider starting with a property that has manageable mortgage payments and minimal risks. This will give you a chance to learn the process and build confidence. 13. Always have a plan B. In case of unexpected challenges, always have backup plans in place. This could include having reserves for unexpected expenses or alternative exit strategies. 14. Stay informed. The real estate market and regulations can change. Stay up to date with industry trends, legal changes, and market conditions to make informed decisions. Remember that while the subject to strategy can offer unique opportunities, it also comes with complexities. Taking the time to educate yourself, seek professional advice, and practice due diligence will set you on the right path as you begin your journey with subject to real estate investing. Let's walk through a concrete example of how the subject to strategy works in real estate investing. Scenario: John, an investor, comes across a distressed property owned by Sarah, who is facing financial difficulties. Sarah's property has an existing mortgage with favorable terms, but she's struggling to make the mortgage payments. John sees an opportunity to help Sarah and create a profitable investment using the subject to strategy. Steps in the subject to deal. 1. Initial assessment. John evaluates the property and determines that it's worth $200,000 in its current condition. He also reviews the mortgage terms and finds that the remaining balance on the mortgage is $150,000, with a low fixed interest rate. 2. Negotiation. John approaches Sarah and explains the subject to strategy. He proposes to take over the property's ownership while leaving the existing mortgage in her name. Sarah is relieved by the option and agrees to sell the property to John for $180,000, well below its market value. 3. Due diligence. John conducts due diligence, performing a title search to ensure the property has a clear title and reviewing the mortgage documents to understand the terms and any potential due on sale clause. 4. Legal documentation. John engages a real estate attorney to draft a purchase and sale agreement and a subject to addendum. The addendum specifies that John will take ownership of the property subject to the existing mortgage. 5. Seller consent. Sarah reviews and signs the documents, providing written consent to the subject to arrangement. She understands that her name will remain on the mortgage, but John will take over property management and mortgage payments. 6. Financing and funding. John secures funding to cover the purchase price of $180,000. He also sets aside funds for any necessary repairs and property management expenses. 7. Execution. The legal documents are signed, and the property ownership is transferred to John. He begins managing the property and making mortgage payments on Sarah's behalf. 8. Property management. John renovates the property, improving its condition and market value. He finds a tenant and rents out the property, generating rental income. 9. Exit strategy. John decides to implement a buy and hold strategy. He plans to hold the property as a rental, generating consistent rental income and building equity over time. 10. Seller's benefit. Sarah benefits from the subject to deal by avoiding foreclosure and credit damage. She can move forward with her financial situation while John handles the property's responsibilities. 11. Potential profit. Over the years, as the property appreciates in value and rental income covers the mortgage payments and expenses, John could potentially earn a profit when he decides to sell the property in the future. Key takeaways. This example illustrates how the subject to strategy allows John to acquire a property without needing new financing. He benefits from the favorable mortgage terms, helps a distressed seller, and has the opportunity to create positive cash flow and equity growth over time. However, John must also be aware of the due on sale risk and ethical considerations, ensuring he fulfills his responsibilities and acts transparently throughout the deal. Here's another concrete example of how the subject to strategy can be applied in a different scenario. Scenario: Emily, an investor, finds a property owned by Mike, who is relocating for work and needs to sell his home quickly. The property has an existing mortgage with a low interest rate, and Mike doesn't want to go through the hassle of a traditional sale. Emily sees an opportunity to use the subject to strategy to acquire the property and potentially generate rental income. Steps in the subject to deal. 1. Initial assessment. Emily evaluates the property and determines its market value to be $250,000. She reviews the mortgage documents and finds that the remaining balance on the mortgage is $180,000, with an interest rate significantly lower than current market rates. 2. Negotiation. Emily discusses the subject to strategy with Mike, explaining that she can take over the property's ownership and mortgage payments while allowing him to move without the stress of a traditional sale. Mike agrees to sell the property to Emily for $220,000, as it's a quick and convenient solution for him. 3. Due diligence. Emily performs due diligence, conducting a title search to ensure the property's title is clear and reviewing the mortgage terms to understand the existing loan details. 4. Legal documentation. Emily engages a real estate attorney to draft a purchase and sale agreement and a subject to addendum. The addendum outlines the subject to arrangement, with Emily assuming ownership while the existing mortgage remains in Mike's name. 5. Seller consent. Mike reads and signs the documents, providing written consent to the subject to arrangement. He understands that Emily will take over the property's responsibilities, including making mortgage payments. 6. Financing and funding. Emily secures funding to cover the purchase price of $220,000. She also sets aside funds for any necessary repairs or updates to the property. 7. Execution. With the legal documents signed, ownership of the property is transferred to Emily. She takes over property management and begins making mortgage payments on Mike's behalf. 8. Property management. Emily decides to renovate the property to increase its market value. After renovations, she rents out the property, generating rental income that covers the mortgage payments and other expenses. 9. Exit strategy. Emily chooses to hold the property as a long-term rental investment. Over time, she aims to benefit from rental income and potential appreciation. 10. Win-win situation. Mike benefits from a hassle-free sale, while Emily acquires a property with a favorable mortgage and the potential for positive cash flow. 11. Potential for profit. In the future, if the property appreciates in value or Emily decides to sell, she may earn a profit while still utilizing the existing low-interest mortgage. Key takeaways. This example showcases how the subject to strategy allows Emily to capitalize on a favorable mortgage and create an advantageous deal for both parties. It illustrates the flexibility of this strategy, which can help solve real estate challenges in various scenarios while offering investors the potential for cash flow and appreciation. Thanks for watching.